were quarantined, but right now we're doing it because we want to, not because we're forced to yet.
Mhm.
We're about to be forced.
Exactly. Self-quarantining. Is that a word?
I mean, this is just going to be a really great time to do face mask and
Yes.
hair mask, exfoliate my entire body.
Buy houses, all of the things it's good for.
It is going to be great. We are on here today to bust some myths. We love to bust myths together. So, yeah. The only thing about
it.
Yeah. Let's see. All right, Gabby, do you want to go off? So everyone keeps asking me and messaging me all night long, all day long. The Fed's just cut rates to zero. What does that mean? What does Fed's cutting the rates to almost 0% mean for us?
Yeah, so I think this is like probably what we wanted to kick off and start the whole live with, is just talking about what does the Fed's cutting the Federal Reserve rate mean, because there's so many myths that surround that. I've had so many clients that have messaged me and said, let's float rates down, let's refinance, let's take the opportunity. Mortgage rates are at zero. And it's not anybody's fault that they don't know that mortgage rates and the Fed rate are not completely correlated together. That's industry specific. I don't expect, my clients to understand that those are not, tied together. So this is why we're doing the live, to kind of talk about that and take away any of those questions that people might have. So it's a common misconception. The Fed rate does not directly correlate with the mortgage rate. We don't even know what the effect of the rate cut on the Federal Reserve side is going to have with the mortgage rates. It's still too early to tell, but basically the Fed rate has to do, well, first of all, if you don't know this, it was cut to almost zero yesterday on a Sunday, which is very rare. So 5 o'clock on Sunday afternoon, everything's going off. But it basically,
everyone was going crazy.
Yeah, I know. I was like, what happened?
I know, if we're not watching the news at all times, like our clients will at least tell us what's happening. We're like, well, actually,
I was trying to spend 5 minutes away from the interest rates, but okay, I'm back. But basically the Fed Reserve rate has to do with the interest rates that the banks use to lend money to each other, which in turn has an effect on credit cards and student loans. And the only thing, or not the only thing, but the major thing with the residential market that it has to do with is equity lines. So your HELOC,
right,
your home equity lines of credit, that's really the only thing that it directly links up with. So that's to answer that question. A little bit long-winded, but it's important to know that it's okay not to know that they're not related. It's okay to not know that.
Right. So that means that mortgage rates are not at 0%.
No, I'm so sorry to tell you that they are not at zero.
No. Everyone thought they were. Everyone.
They did. And it would be, I'm not.
I was freaking out because I was like, oh my God, last week, I was like, there's no way that's ever going to be 0%. And then I was like, wait.
My anxiety was
in my mouth, what just happened?
I know. No, they were historically low. I would say from the beginning of March. Yeah. Up until, gosh, what was last Tuesday? Let me look at that date. All the way up until the 10th. From the beginning of March until about the 10th, even the end of February, rates were starting to decrease significantly, and they hit historically low, low times. We were joking around in my office. We were like, the world's ending, but they got really low. So if you were able to lock in your rate during that window of time, kudos to you. Dude, you
virtually high five now.
Yeah, virtually
high fives in real life. Yeah, that's probably the saddest thing that's actually happened.
Can't touch anyone. Just
no.
Doing these in public.
Touching people, not being able to touch people is pretty difficult.
Do you do the fist pump or the elbow?
No, you're not allowed to do that. No touching. Every time we're finger gunning, we're like, "Hey, good job." It's not as
bringing
fun.
The finger guns back.
It's not as fun. It's not a natural thing for me.
Yeah, I get it. You can start doing one of these, like the 70s.
Hang loose.
I feel like everybody's losing their minds right now, but definitely, yeah, when the rates lowered, it was a direct reaction from, the reason why we're talking about not touching with coronavirus.
Yeah.
And yeah, towards the end of last week, the rates definitely came to a very abrupt halt in their decline and staying historically low. They're definitely nowhere near where they were. But with that being said, they're not at the point where they were in 2008, 2009, and the years after that, where they were definitely a lot higher, and there was a lot more like worry and panic that was going around. So even though historically at that ridiculously low rate, that doesn't mean that it's still not a good time to take advantage of the market and buy and refinance. I mean, just
exactly. I mean, it's still a super low interest rate. It's still a great time to buy. We have so many buyers, and I think that more of our worry right now as real estate agents is that the fact that we don't have enough inventory.
yeah.
And then everyone's thinking that this is the next recession. I mean, everyone's like doomsday, it's over. Like we might as well just like stay in this house forever, or we should go because it's 2008 again, and it's really not. Of course, I feel like sometimes people don't believe us because we are younger, but we have a
It's
lot.
okay. I'm used to it.
Yeah, just because it didn't like really necessarily affect us. I mean, it's very obvious that it didn't.
Right. We were not owning homes in 2008. Neither one of us.
Why it happened. It's not that we're not educated at all about it. So I just wanted to let people know that it's literally the complete opposite of everything that happened in 2008. What happened back then is that people were at their max. They really were depending on the equity of their home to be able to live their lives, honestly. Now we are only doing, I believe that back then it was 25% of their income was going to the mortgage, and now it's 15%. I know.
Much better. Yeah.
Much better. So 15%. So people are getting paid way more.
Yeah.
They're not pulling equity out of their houses and living off of that anymore. And then back then people had to pull the equity out because they didn't have jobs. And now our
I mean, self-employment, our non-employment, economic rates are definitely also like at a low. I mean, no matter what side of the political coin you fall on, I mean, that is definitely a positive, with our, one thing that's positive with our economy right now that we have, everyone has a job, but, of course, with that being
the great thing is that millennials are trying to make this all remote. So we are already turning the world into remote jobs. Everyone was hating on us that we didn't want to go
millennials.
But now we all can still work because we're working remote all the time.
Yeah, that's definitely an excuse. We're like can't be exactly off of work. It's like you have a computer. You can
especially in Charleston, everyone works remote. I mean, of course, I feel bad for the local businesses. What they're doing is really awesome. Everyone's working to make this still work. Now is available. Two Burnett's, my favorite boutique, is doing curbside delivery.
Nice. I love it. Just like drop on your doorstep. Here's your clothes. Bye.
Clothes you can wear on Instagram.
Yeah.
And that's
it. A lot of restaurants are doing that too locally. I saw a few that are like hooking up with all the delivery services and like closing doors for like dining room service. But it's a way to still keep business coming in, which is good.
Yeah, it's really good. I just wanted to do a few other things why it's not a recession and why it's just
fit that knowledge.
I don't know how to fit. I wrote them down. So when mortgages, they're not as easy as they used to be to get a mortgage. I mean, really, we talked about this before that you could just be like, yeah, I make $1 million.
No, I don't have tax returns to prove it.
Yeah, so it was just so much harder to get a mortgage back, or now it is
so much easier. Yeah,
to get one back then. So really, it was hard not to get a mortgage. So everyone was getting a mortgage. People were buying houses that they couldn't afford.
They were
That's
also
not
getting a ton of like adjustable rate mortgages where, you know, they were fixed for a certain amount of time and then adjusting. And then they had that beautiful thing called a balloon, which meant
a balloon.
the bank just be like, hey, you owe your entire mortgage next week. And you're like, okay, you know, we're all, you know, not going to be able to do that. So that's, I don't know, a lot of different things that used to happen in lending. That's just not anymore, you know?
And also the interest rates are so high back then where I think they were over 6%, probably even higher.
Really?
That's
I've
not
had clients say they used to have an 18% interest rate. They used to have
houses were so
interest rate 10. Yeah.
So like on top of that, houses were way too expensive, and there was actually a surplus of homes on the market. And right now we have been seeing, you know, inventory is low, and I feel like I say that every single day, but inventory is so low that there's not a recession. There was a surplus of homes. There's over 6 months worth of homes on the market at all times.
Right.
Now we usually have 2 months.
Right. I mean, it's true. I mean, it's definitely still a seller's market. I feel like, at least I mean, of course, we're talking about our market. You know, that's not the same in every market.
I'm pulling these facts.
Nationally?
National, yep. It's
nice.
not. So nationally, it is a 3-month housing. So we have 3 months inventory of housing. In Charleston, we have about 2 months.
Wow. Okay.
That's something that I changed differently based off of those things. I mean, I don't know who's watching this. So I want to pull it on a national level instead of a local level.
Okay. I like
it. Charleston itself is a stronger market than nationally.
No, I mean, I prefer that too, because I mean, our interest rates are national. They're not just, you know, in our market. So, and I mean, they cover everything. So, but yeah, overall low inventory.
We're still a very, very strong economy. I mean, the market is doing amazing. Of course, when we go through something like the coronavirus, we do see dramatic things happening to the market, but it luckily has not affected housing. No one's predicting it to be affecting housing. I've been following every economist out there, and everyone is basically shaking realtors and mortgage lenders like, it is your duty to let people know this is not 2008. You have to let these people know. Right.
That's what we're doing. That's what we're doing right now.
Economists, you watch us.
Yes, I know. And it is really important because, like I said, you know, a lot of clients, I'm glad that people are reaching out being like, let's refinance. Like, please keep talking to your lenders, talking to your realtors. If you have an appointment to list your home, don't turn around and all of a sudden decide not to list your home because you let the naysayers get in. I mean, keep that appointment. A realtor is never going to come to you and be like, yes, we need to list your home, and then not be able to sell it or get you. Like, ethically, that's not what they're there to do. You know what I mean?
So, Gabby, ask me why it's a great time to list your house this week.
Okay, I have a great question. Are you ready for this?
Yeah, what's your question?
Marley.
Yeah.
It's a great time to list your house.
This week, it is an amazing time to list your house. You know why? Because we're quarantined. All we're doing is looking. That's all we're doing.
Are you going to do a virtual tour?
You want to get the most views of your home online? Yeah. List your house this week.
List your house this week.
Because that's what they're doing. And the thing is that realtors are still answering their phone saying, oh, you want to know more information about this house? Perfect. Well, we can't do it this week, but let me line up 30 people to look at your house the moment that we're allowed to go out. And we screen people before. We ask the natural questions that we have to ask. Have you had a fever? Have you been around someone? Blah, 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 blah. We have
to be safe. Right. Yeah.
No one's excessively doing anything. But it is an amazing time to list your house. Like, if you want maximum views.
Yeah. List your house this week.
Talking is going to skyrocket this week.
I think you have a very good point. I was even more impressed if you went to your listings and did a virtual tour and just would send videos out, virtual tours to people.
Oh, I do that all the time.
Yeah.
Yeah. I mean, I have clients that are from out of town, and I always go Facebook Live, or not Facebook. I FaceTime them.
Yeah.
Yeah.
I love it.
Yeah. But yeah, so the market always goes crazy when something is happening. Mm-hmm. Hey, Will, that's my VP of sales. So
hey, Will.
He is definitely,
He's like, yes, go. It is a scary time. I think just our overall message to everybody was, don't panic. Don't all of a sudden stop looking to buy. Don't all of a sudden like not list your home. Don't think that mortgage rates are at 0 and don't think that they're at 10%. Reach out to your agent, reach out to your lender and have the conversation in person because you never know until you make that step to reach out. So just start conversation. And again, all the clients that I have where it doesn't make sense for them to refi like today doesn't mean that it's not going to make sense tomorrow or next week. And the same with purchasing. So I have a list. I have like 60 people on my list, and
I have never seen more online leads coming through. So we get buyer leads every time you click more information. It goes to my email. I have never seen so many so quickly. Morning. I was like, holy crap, like 60 of them before like 10 o'clock. People are shopping online.
Yeah.
People want more information about their
house. People want to buy. People want to refinance. It's just, the mortgage. Another thing that we didn't really touch on was why are rates not directly mirroring Fed rates in terms of being lower than where it is. And the reason, Caitlin, quoting nice. But
we can pull it up. Caitlin.
One of the reasons why it's not like directly correlating is because, within that whole refi boom and purchase boom when the rates were historically low, you have no idea how much business was booked. And it's just insane. So, banks are like purposefully slowing down. They just can't handle it. Financially, anything. One of the biggest things we haven't talked about is the fact that feds are going to kind of bail out the mortgage industry a little bit. So that's coming, announcement today and later on this week. But I think it was actually supposed to be today when they were going to touch on that. So, that might cause interest rates to go down a little bit.
I don't think that people know what that means.
So basically what I should do also after this, now that I'm thinking about it, I should link like in the comments, some articles for people to read to kind of like, can I do that afterwards? Is that possible?
Yeah.
Technology challenged.
For sure.
I have like some really good articles that I can send so people kind of understand what that means. But basically it just means that, the feds are, or not the feds, but the Federal Reserve.
I don't know. I just like it.
They are, there's just been a big announcement, part of whatever they're doing. It's going to kind of correlate into mortgage rates. It hasn't really been like completely, there's not a lot of information right now, but within the next couple of days, there's going to be more released. I follow, just like you follow all the economists, I follow all the different mortgage sites.
Yeah.
There's been like kind of chatter on some of them. And, there's definitely going to be more to come. So I'll hold off on that for right now, but I'll definitely post some more info, like as it comes available. I'll post it like in the comments so that people can keep checking up on it and stuff. So hopefully in the next coming days, we'll see even lower rates.
What?
It happens. I don't know.
Your job's so interesting to me because it's so completely opposite. But people expect me to know your life. And I'm like,
I don't even know sometimes.
Completely different careers. And I'm like, I'm like, never, like, I'll quote things that you tell me.
Yeah.
And I'm like, but please never think that I'm an expert. I stay in my lane. Stay in your lane.
I do the same thing.
It's interesting to me because I would never be able to know any of that. I can't stalk economists and the market and the banking. Like,
right.
I'm good.
I can't do that either. Anytime somebody asks me a question that's in the real estate world, I'm like, you know what? That's a really good question for your agent.
Yeah.
Not me. I can answer some things, but
Yeah. There's some things that we can answer. There's something I'm just like, I don't know. Like, you expect me to know all 50,000 different types of loans that you can get? No, right. I don't care. No offense.
I care. I care a lot. I love it. I can talk about mortgages. We could do this for the entire day.
Well, I love talking about it with you.
Yeah, I would never have anything to run out of talking about. I love, the career that I'm in, but I could never do what you do because it to me is like night and day, and vice versa. But that's all right.
But it's so fun. It's so like every time we're out together, everyone's like, "Please stop talking about work," and we're like, "So fun."
I'm so happy we
really
think it's done.
talking about mortgage rates.
God bless. I mean, this is why we can't go out in public that much. Not even just because of Corona, but because we just annoy everybody.
I know, it doesn't matter. Do you have
I think
anything
we covered.
to tell other people?
Last looming thought. If I'm not your lender, you should still call your lender, call your agent, and don't let the hearsay scare you from not buying or considering a refinance. Also, don't get caught up in expecting the industry to be at a certain rate or at a certain, don't have too many expectations and don't fear too much. Just talk to the professionals and we'll help you through.
Exactly. And if you have any questions about the market, is it crashing? If it's a good time for buying or selling for you, please reach out to me or your very educated realtor. And they would be happy to discuss it with you. I can shoot you over 1,000 different articles to help you out with that, connect you with some economists to understand a little bit more. It's not me making up these things. These are facts that I've been reading and been talking about. It's not my opinion. It is what it is.
You're the messenger.
Yeah. And the pigeon.
The pigeon. I love it.
All right. Well, Gabriella, anything else, honey?
No, guys, have a good day. Wash your hands. That's it.
Wash your hands, and don't forget that you're washing your hands a ton. You should probably invest in some hand lotion too.
Go call.
Yeah, thank you. Alrighty, well, is that it, Gabby?
I think that's it. I'm pretty.
Thank you so much for getting on here. I think that we're going to be able to clear a lot of questions that people have.
Mm-hmm.
I thank you for getting on here and helping clear up the whole Feds put the rates at 0%.
Yes, exactly. Yeah, please don't ask us if it's down at 0. It's not.
Wait, my cat's trying to get in the door now.
You gotta go.
Yeah, my cat's like, open it up. The lighting's good in there.
Oh, I have, the world's, where she is. There she is.
Queenie.
Just being a little good girl. So, all right, girl. Thank you. I appreciate it.
I'll talk to you later, okay?
Bye.
Bye.